do want to get the government shutdown into this conversation because markets so far don't look that concerned. We're not getting the economic data that we love to dig into, but I am curious what this means for the Federal Reserve. We have a policy meeting coming up on the 29th. It looks like we're not going to get the CPI release that or the inflation release we were expecting next week. We know the jobs market has been delayed when it comes to that official NFP release. When it comes to making policy, it feels like it just got a lot harder to do.
Well, with this shutdown, the Fed really is flying blind. And the consequence, of course, of that is that they do need to look at all these other data sources. There are other things to look at, but none of these can be mapped directly one-to-one into the government jobs data. So that's why both on CPI and on non-farm payrolls and a broad range of other indicators, we normally look at retail sales, durable goods. We just don't know, literally at the meeting on October the 29th, what truly has happened to the economy since the meeting that we had in September. So this is a very, very important conclusion. There's even been some debate around, okay, but how do you then communicate? Do you start talking about the private sector indicators? There's a broad range of things you can begin to look at. What do you put weight on? That debate at the press conference will become very, very important because if he begins to put weight on consumption, is it certain inflation indicators, is it certain labor market indicators, that will be very revealing for what they think is going on truly in the economy. So that's why it is a very problematic situation to make a decision on the back of very, very weak information.
And just under a minute left here, but I also wonder about the different elements of this shutdown where possibly we're not just talking about furloughs, we're talking about layoffs, we're talking about government workers potentially not getting back pay. What does that mean when you think about the long-term effects of this shutdown?
Yeah, because that then implies that suddenly we could have, that there could be weaker labor demand. And maybe it could be that the labor market now also starts to weaken because government jobs are going to weaken further. So it's just making the picture incredibly complex for the FOMC. And on top of that, we already had some dissents at the last meeting. So now they need to debate, well, what is the true state of the economy? And most importantly, how do we set and calibrate the Fed funds rate in response to the data that we think that we have?